In this video, I will show you a great way to trade support and resistance level. It's very efficient and it's basically a trend following approach where we are using multiple time frames in the most effective way. So we are starting here on the 4-hour time frame, which we can deem as our higher time frame. And here we were first established a trend direction, and clearly the market is in a downtrend. From the top left, we are moving to the bottom right, which is the classification of a downtrend. This means that we are now looking for short opportunities into the trend direction. That's usually the most effective way to trade it. What we're then doing is we are looking for strong support and resistance levels, and basically we want to see the last time the market put in a good support level. And that is where we are starting to look for swing points. And this swing point really stands out, right? The market moved lower and then shot up higher. This is what we would call a swing low, and this is a starting point and our anchor point for our first level. So we can draw here our level going forward, and what we see is that the market had another second reaction here. However, the second reaction is much weaker. The first time the market shot up much higher. Here, when the market reached this level, we had a weaker reaction. And this is actually exactly what we want to see. We want to see that the market is paying attention to the level, but not as strongly, which means that there is more selling coming into the market and fewer buyers are able to or are ready here to push the price higher. So this is exactly what we want to look for. This is what we want to find, a support level that is weakening and that can help us now find good trades. Also, what you will often find is that we are not always able to pinpoint the level down with just a single line, but very often you will see more or less of a zone. So what we have is here, it's the low, we're drawing it here from this area, and then you can see the second time the market overshot the level, and that gives us more of a zone rather than a single level. And I find this very helpful in my trading because trying to nail down the price with just a single line is often not super helpful. Alright, so we are in a downtrend, we have this great support level, and we want to wait for the market to get back to this level, and this is where we are looking for shorting opportunities into the trend direction. And this is a very, very common pattern. You don't always have to find those long-term levels where you have 3, 4, 5, 6 touch points as support. This is something that will happen all the time, and as we will see in this video as well. So what we do is we wait for the market to get back here, then we drop to the lower time frame, and we're looking for trade continuations or trend continuations in the downtrend. This is what we will call support turning into resistance. So we'll just wait and see, is the market coming back to the level, and then we can start observing the price action. So you can see the market moves higher, and we are coming very close, not quite at the level yet, but at this point I would recommend go to the lower time frame. We can go to the 15-minute, to the 5-minute, really depends a little bit on you. And here, obviously, now we don't want to short. The market is just ripping higher, and the market is in a very, very strong uptrend, right? So we don't want to short a strong uptrend on a daily time, on the lower time frame. We are in an overall long-term downtrend, but we have to wait until the lower time frame also lines up. So we'll just wait and see what happens here. We can see the market gives us here this very weak top, double top. If you would have an RSI, this would also give you kind of a divergence, right? We have here our short-term swing low, not a really confirmed support level, but we have at least one touch point. But we are not coming at the level here. So very often what you will see is this is really tempting the traders to get in too early. You already see that there is some weakness with the double top, and you know from the higher time frame that there is a big level. You are in a downtrend. You don't want to miss this next big move that may or may not come. So a lot of traders will jump in early, and FOMO is a real thing. Fear of missing out is something that many traders suffer from. But you will often see that the market is really drawn to those levels. Those zones have a huge pull to the price action. And let's see what happens. And this is what you will often see. So the market did struggle a lot. We haven't seen a push until now. The market is really pushing into the zone. A lot of FOMO traders maybe got in here, maybe got in here. We had a lot of struggle around local support areas, and then the market made the move. And this is where you will often see the market decide, are we going to break out to the top side and change the long-term trend direction? Or if the market remains underneath this area, which is now becoming resistance, then this offers great short opportunities. And this is a very, very common pattern. So aggressive traders may already get in here now, And what you could be doing is, as a very aggressive entry, put your stop loss all the way above the range. If the stop loss gets hit, then you definitely want to be out because the market is pushing into the highs, but it's also a very good place to hide your stop loss. If the trade works out, this is the perfect place where you don't want to get taken out. So the downside, what you could be doing is when we scroll out, because we're trading with the trend, what we could be doing is layer our targets. For example, here is the ultimate low, that is the endpoint of this initial trend wave. Here's also a little bit of a supply area that started this last uptrend. So what you could be doing is structure your trade maybe for the first target 3-to-1, which is already a huge reward to risk ratio, and then go to a 6-to-1 here. You could scale out of your trade, but that's a little bit up to you and your personal preferences. Then you can see we're retesting it again. That's why we're putting our stop loss all the way above and all the way outside of this zone. We're struggling here a little bit. You can see previous support turns into resistance on the lower time frames as well. So you can see shortly after the market did hit the first target. It wasn't smooth sailing all the way, but you can see how the market nicely progressed, and you could have realized quite a large reward to risk ratio. Let's see afterwards, the market keeps trading lower, but your first position could have been already here exited. And what you will often see is that those areas, especially if you're using a 5-minute time frame, if the price comes back to this level, you may be able to realize another trade at this area here. So you can see shortly after the market is back, after hitting the first target, the market reversed back into the resistance area. And this time it looks like we have quite a strong candle here. However, what we want to see for a directional change, we would have to see the market break and retest the area. If we don't get the retest and if we fall underneath it, then we would still look for shorts because overall the trend is clearly still bearish. So what we could be doing is, again, we drop to our lower time frame once again. Here, very, very strong bullishness intraday, but let's see what happens. Okay, we're seeing the market fall back into the range. No support, very, very strong selling, right? Really strong selling sequence, the strongest selling that we are seeing here in all of this recent trend activity. We are making another run, which is interesting because it gives us this lower high here, right? We have the support level that we could work with. If we get below this area, this would be a intraday short pattern. So we could short this market on the breakout. Again, we are still going with the higher time frame on the higher time frame zone, but on the lower time frame, which allows us to really nicely get in a higher reward to risk ratio. Stop wise, we could put it above the high, we could put it above the zone here as well. Target wise, we could again look left, look for targets. Here seems to be an important area. Here's an important demand area. So again, you could layer your target. Here already 2.6, 2.7 to 1 is a really decent reward to risk ratio. Let's see, we speed up the price. We're retesting this area. It's holding for now. And you can see the bearishness coming back into the market. So now let's see what happens afterwards. You can see those are our first two reactions. Here the first one, this the second one. The market came back into it even a third time, and then you can see the market made a huge push, and the downtrend is still here in play on the higher time frame, so we can keep looking for this pattern. What we have is that we are looking for the downtrending end wave here that is happening after this breakout where we broke support. So that's what we want to identify. Then you can see shortly afterwards the market dipped into this area, showed another reaction, and the second reaction is much weaker. Here you can see clearly we made quite a significant move higher. Here the move is much, much weaker. And then this is the trend continuation that we're looking for. So the market clearly confirmed the downtrending move. So now we have our second zone that we can use for our trade timing. We draw it on the 4-hour time frame, and then what we do is we wait for the market to get back here and drop to a lower time frame to look for an entry, right? So we can just use that as a very effective multi-time frame approach. And you don't only have to use it as a 4-hour and 5-minute approach, you can use any time frame combination. We could also use 4-hour, 1 hour, for example. So we wait for the market to get back to this zone, and then we want to look for trend continuation setups. You can see the market obviously didn't make it yet, but it is confirming the downtrend. So we are clearly having way more bearishness in the market than bullishness. That's good. That is confirming that we are looking for the right trend direction. So we are back at the level, and we really want to see the market hold as resistance here. Support has to turn into resistance. So the market shows another premature reaction, just like it did here in the beginning. This is not a short signal yet. We really want to see the market reach into the zone. That is so important. And if you've been struggling with support and resistance and FOMO is an issue, then just waiting until the market actually makes its way into the zone could really help you fix big issues in your trading. So now you can see we are retesting the lower end of the zone already, and at that point we could go to the lower time frame. For example, we can look for the 1 hour, and then we start on the 1 hour and make our trading plans. So if you've been watching my previous videos, I've been talking about accumulation and distribution patterns. And what you will often find is that when a trend is getting into a mature trending stage, which is happening now, so the uptrend here on the intraday time frame seems to be mature, so it has been going on for a long term. And then what you will often see is that this is then going into an accumulation or distribution pattern. And this is where you often see the market then roll over. The market sometimes needs a little bit to roll over, but it's okay. We have to practice patience. Patience is one of the most important skills in trading. So we're making another run here, and you could trade those pushes on the lower time frame already on a 5-minute. Obviously, this will look much different, and you would be able to trade those short-term reactions. But if you don't want to be a short-term day trader, then you could definitely also make this approach work on the 1 hour time frame. So you can see we are making a run here at the lows, not a breakout yet. So we have to wait a little bit more and stay patient. The market makes another run at the highs. We can update our short-term and lower time frame level. So we want to see the market really make a push and break out, and that's where we're looking for shorts then into the trend direction. So you can see patience is here testing us, and now you can see we have the breakout. And this could be now our trend continuation because we're going with the higher time frame. We are trading at the perfect location. We are seeing strong selling coming in. The sellers were able to break out of this distribution pattern. Stop-wise, we could put it here above here, the breakout sequence. And then target-wise, you have options. Obviously, we're going with the trend, so we don't have to be too stingy with the target. We could go for, you can see, almost a 6-to-1 reward to risk ratio. Let's see, speed up the price action. We're having the retest, but you can see we are just retesting the previous support resistance area. And you can see we're coming close, have some reactions here. When the market puts in a double bottom here, so close to your target, you definitely want to think about taking partial profits at least. The closer the market is and the closer the price is to your target, the more aggressive you have to manage your trades. And then you can see shortly afterwards, this may or may not have been a target hit, came very close. But if this doesn't hit your target, and then you can see the market is failing to make another run at the target, you definitely want to be out of the trade and close it manually. The closer the market is to your target, the more aggressive you want to be with your take profit, because the more you have to lose. And that is a very important concept. But again, you can very nicely see how we can put this together. This is a very different approach than most traders use support and resistance. I've been mentoring traders for a long time, and I've seen many traders struggle using support and resistance. But this way is often very helpful. It focuses on short-term support and resistance. It helps you trade with the trend. And it's a very straightforward approach. And again, to recap it, you want to make sure that you identify the trend direction so that we only trade into the trend direction. You want to look for endpoints of trend waves such as here and here. You want to see that they have 2 touch points, that the second touch point is also weaker here as well, much weaker than the first push. Then you want to see the market give you a strong breakout like it did here, like it did here. And then we trade the retest, support becoming resistance like it does here, like it does here. We have many options. You can go to the 5-minute to the 1 hour time frame, depending on your preferred trading style, preferred on your trading duration and holding time as well. And on the lower time frame, you can look for patterns, fake outs, any price pattern that you are interested in, and trade those. You can you can trade pullbacks, you can trade deep retests, depends on your personal preferences. But with this approach, it's very universal. You can apply it on Forex, on indices, on commodities, across all the time frames.